at the bottom line of everything, execution. There's no point having an objective and there's no execution plan. And it's not just about having the plan, it's having the mechanisms to ensure that milestones are met. That is a fundamental weakness we've realized in the report.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss Nigerian capital market outlook for 2026, recently published by Proshare. We'll be exploring the capital market as a pivot to Nigeria's economic recovery. My guest is Mr. Teslim Shitta-Bey, Director of Research, Proshare. It's good to have you, Mr. Teslim, as we formerly call you TSB in Proshare. It's been a while, so it's nice to have you as part of the people kickstarting the year. You know, our first guest was around budget. Today we're looking at the capital market. Nice to have you on the program.
Thank you very much, Otto. It's a pleasure being on the program.
Yes. And to our viewers, of course, the Proshare Nigeria Capital Market 2026 Outlook Report is titled The Capital Market and Nigeria's Economic Recovery Path. So let's begin by asking you about the geopolitical conditions and how, from the report, it's going to impact the Nigerian capital market in overall. What are those geopolitical conditions that we're looking at?
While we wrote the report, there were certain evident developments in the geopolitical and geoeconomic space. But subsequent to the report, there are even further developments that have occurred, especially in a place like Latin America. The incident in question, I'm sure everybody knows. So geopolitics is going to serve as a fundamental shaper of the way resources will flow around the globe in 2026. In Nigeria, it's of particular concern or of particular interest, depending on what side of the divide you are on, because it's a pre-election year. And one of the major characteristics of pre-election years is that administration, in terms of day-to-day administration, takes abeyance for more political issues, political survival. But let's get back to the issue of the geopolitics that is occurring. Now, there are certain key elements of geopolitics that I think we need to take cognizance of. And we did that in our report. First of all, we need to look at the patterns of global interest rates. We need to see how global interest rates are shaping up across different segments of the global economy. I think it was First Bank in their economic outlook, they called it asynchronous. Asynchronous. So in other words, you're seeing disparate, different kinds of outlooks occurring in different regions for different reasons. And that's one of the unique periods where we've seen this kind of development. Now, let me step back a bit and give you some context. Prior to the election of President Donald Trump, we had a world economy that was based or hinged primarily on what many people called multilateralism, simply meaning that trade relations were amongst nations. And nations agreed amongst themselves to abide by certain rules. And those rules will guide trade for a period of time before they are subject to reviews and all that. President Trump came with a different worldview. He started off with a monolateral world, a unilateral world, where there's just one single power source that dictates how other persons will engage with that power source, the largest economy in the world. Unfortunately, the tariff regimes that were introduced did not lead to the outcomes that were expected. So there were certain delays and disruptions. And so we reverted to what we now call a bilateral world, where you have bilateralism. So it's about negotiations between two nations. Yes, two nations have a conversation and say, okay, you know what, these are the agreements we are having. That is major. It's major in the sense that when you look at global economic efficiency, you will perhaps want to encourage a multilateral environment where agreements are done amongst a multiplicity of countries. And so you don't have to keep going back to negotiate between individual countries. And so we saw prior to Trump, a growing level of global collaboration and cooperation on climate issues, on tariff
trade,
issues, and
tariffs.
now that has broken. What do we have in its place? Perhaps a much more expensive global trade regime, where you see nations having exclusive agreements amongst themselves. So some countries, for instance, when you look at America, some countries are subject to 50% tariffs. Some countries are allegedly subject to 100%, but that never took off.
Yes.
But it was attempted, but it never took off. So we're seeing a world that is increasingly fractionalized. And people are collapsing into trade blocks. So you have the BRICS.
The BRICS, yeah.
And we will discuss perhaps later what we call the BRICS bridge.
Yeah.
Right? And that's fundamental for countries in frontier economies like Nigeria.
Yeah.
The BRICS bridge is very important. Very recently, major trade transactions took place between Brazil and some other BRIC countries. Yeah, India and other BRIC countries. And the dollar was not used at all.
Yes.
None of those multiple transactions involved the dollar. What that means is a gradual decline in the significance of the dollar in international payment and settlement systems. That has a tremendous amount of implications for countries like Nigeria that are heavily dependent on the dollar.
Yeah.
That might require some strategic rethinking, portfolio readjustments.
Yes.
So we expect to see all that in 2026. Reconsider our portfolio of currencies in our reserves and decide on how to optimize that portfolio, given the fact that one of our major trade relationships are with the East.
Yeah.
And when I say the East, I mean basically the Far East, where we're looking at China, for instance. Yeah, China basically. So we need to rethink reserves and suggest perhaps a more balanced reserve structure that allows for a greater amount of efficiency and reduces domestic costs. Because that could happen. Rather than me, for instance, wanting to buy something in China, I first of all go through the dollar, then go through the renminbi, and then now settle. I can go directly. And that cuts out the need for the dollar.
Yeah.
However, that also has implications for our relationship with America.
Yes.
So at the geopolitical level, there's a major challenge there, right? So what we're seeing is a fractionalized trade environment globally. That is going to persist in 2026. Don't see anything changing there at all. Okay. Now, we talked about interest rates earlier.
Yes, interest rate conditions.
That's very important. The United States government has not shied away from persistently arguing for lower interest rates. And the President of the United States has done his best to get those rates down.
He's going to get his man later.
So it's been a long walk to freedom, but we're getting there, right? To lower rates regimes in the United States. How stable and sustainable that is a different call entirely.
Yeah.
And the reason why I say that is that with what we're seeing globally, with international prices rising, those international prices may trickle, supply chain price increases may trickle into the United States economy. And if that happens, the Fed will inevitably have to restrain itself in rate cuts to prevent inflationary pressures adversely affecting the American economy. So a lot is still fragile. But interest rates concerns are there. GDP growth rate concerns are there. I mean, the American president is interested in growing the American economy, right? So he wants rates to come down so that we can expand output and all that. Whether that will happen in 2026 is anybody's guess. It depends also on what happens in Europe. And I don't want to get into the detailed arguments of the relationship, the increasingly fractionalized relationship between America and Europe. And the consequences for African economies and Nigeria in particular. Those are also levels that we need to increasingly interrogate. You know, from the first to the second quarter, we need to be mindful of those relationships, right? And that will define how well the Nigerian economy itself will do in 2026.
If you dovetail into the markets.
Yes, because we've talked about stability.
Yes.
Nigeria has achieved stability, right? We've seen a situation where there's been stability in the foreign exchange market. At least the exchange rate adjustments have been within a reasonable band, much
Band,
lower
yeah.
than the historical
Yes,
widespread
disparity,
arbitrage
and all that,
between the BDC market
Yeah.
and the official market. We've seen that arbitrage narrow significantly,
Yeah.
which is quite fine. We've also seen a situation where inflation throughout virtually all of last year
Has
has
decelerated,
decelerated except in March.
Yes.
But throughout the rest of the year, it has decelerated. So we're certainly at a place of 14.45%, as distinct from the 34% in November 2024.
Before the rebasing.
Before the rebasing. So we are seeing improvements in the macros. But as people have rightly pointed out, what's happening to the micros? What's happening to the household? What's happening to small-scale businesses and all that? Those are conversations I think we will also have later.
So very clear, you've said it, very insightful. The global trade structure is fragmented. The interest rate conditions, of course, we may see easing, which will impact foreign portfolio investments and the rest in Nigeria and other things that we'll have to track. Now let's look at the African markets. And what are those key things that the report captured that, of course, will shape developments this year?
Okay, great question also. First and foremost, the report emphasizes the need for further African integration, especially capital market integration.
You've been an advocate of that.
Yes, I've been a very strong advocate of that. I mean, I should be able to buy shares on the Joburg exchange. I should be able to buy stocks on GSC. That's the Ghanaian exchange.
Yes.
And that's one of the best performing exchanges for last year, 79%.
Yes,
remarkable. Yes. So and East African economies are doing quite well now, right? One of the exchanges did over 200%. So how do I key into those advantages in a fragmented capital market situation on the continent? The African Exchange Linkage Program, ALP, has started, but it needs to accelerate those structures and those agreements to ensure that through whatever means possible, we should be able to make payments seamlessly across the continent. So I identify a gold mine in Ghana I think is going to do well, I buy. I identify, for instance, a copper mine in Zambia or Zimbabwe, and I buy. I identify. We need to open up the African continent and intensity in a world where we've talked about fragmentation. We've got to consolidate the African economy, and the way to do it is through capital market. Long-term investment comes through capital market. You can't use short-term money. You can't use hot money, right? So you need to use patient capital. And that patient capital can only come in with the right conditions. So we've got to sit down amongst ourselves in Africa, and we've got to look at all those barriers to being able to execute capital market transactions across the continent and bring them down. The time is now, not tomorrow. We cannot wait any further, because within the context of this fragmentation we are seeing, dominant powers are recoloring the landscape, the political and economic landscape of the world. We cannot be carriers of wood and hewers of water in an environment where might is right. We become better when we are integrated. I'm not saying that you remove all the borders and you no longer recognize countries. I'm only saying that capital flows should be a lot easier and more convenient. And that's what we advocate for.
Seamless flow of capital.
Seamless flow of capital across the continent. It allows for efficiency. Let me, for example, give you an example. You see Dangote, for instance, opening up
has operations across Africa. It's a Pan-African.
There's a Pan-African. And we see Tony Elumelu talking about his Afri-capitalism. And we see ETI. Running businesses across Africa. That's the direction we need to go. For instance, it's rather embarrassing to see that I want to go to a North African country. I first of all fly to Europe, then come back to Africa. That's inefficient. So what we see is a 2026 where Africa begins to take its rightful place. And you know why it can do it now? The world has realized that it needs to diversify access to critical resources. Where are those critical resources located? Africa. Precisely. So we now have what it takes to negotiate.
Bargaining power.
Yes, we have bargaining power. And so we need to take opportunities now and negotiate our future. We can no longer be what we were in the past. We can be better.
Yeah.
And I think the report emphasizes that fact, that there's need for a greater integration. We are calling on countries like Nigeria, for instance, to up the ante.
To be at the lead.
You need to have leaders. If things are going to move, every institution that grows must have a leader, right? And I don't see any reason why Nigeria can't be that leader. Yes, I agree. Its GDP has slipped, so it can no longer claim to be the biggest boy in Africa in terms of economic size.
Yeah.
But it is still a sound and significant voice on the continent,
capital market,
especially in the capital market. So the report says, you know what, Nigeria, you have a responsibility to Africa. Lead the continent along the lines of further capital market integration, a deepening of the African capital market, right? Now, if we can get that done, at least the first few stages of that in 2026, then by 2027, 2028, 2030, we see a much more vibrant African economy. We see greater integration. I mean, currently we're seeing companies in Nigeria, from Nigeria, investing heavily in other countries in the continent, right? That is what we want to deepen. We want to see other countries do the other way around. I mean, we've got MTN, which is a South African company investing heavily in Nigeria. So these are the kind of investments. So capital flow becomes more efficient and less expensive.
Yeah.
And that's what the report really keys into, that this is the African era. It's the time of the Africa to rise.
Yeah.
It is no longer a question of mouthing it. Anybody can mouth it. Talk is cheap. But now it's to act it. So those executions that are required, we expect the AFDB to be engaged.
The Afrexim Bank.
The Afrexim Bank to be engaged.
And the AFCFTA structure.
The AFCFTA structure needs to mature to a point where we're no longer aspirational. We're actually working our talk. You understand? We need to work that talk. We shouldn't just be aspirational. At the bottom line of everything, execution. There's no point having an objective and there's no execution plan. And it's not just about having the plan, it's having the mechanisms to ensure that milestones are met. That is a fundamental weakness we've realized in the report. We have the plans. It's fantastic. It looks very beautiful. But beauty alone doesn't cut it.
Yeah.
What we need is character. And character is embedded in execution. And that's what we have argued in that report.
Definitely. I mean, it's something that everybody should read. The need for integration and the need to ensure that capital flow is seamless and efficient. But let's look at Nigeria. I mean, the capital market remains one of the good standpoints, the good reference points of Nigeria's prospect of becoming a great economy, technology transformation and all that. For this report, what are those key pointers that we'll see that will really shape the market and impact the economy? And of course, the regulatory landscape. What's the regulatory landscape looking like? And let me just put a hint. I was impressed to see that the Nigerian equities market, the Nigeria exchange, hit a 100 trillion naira market cap. That is quite remarkable. Shows great things that can happen in the market.
I'd like to take off from where you just ended, and I'd like to congratulate the NGX for meeting the 100 trillion naira capitalization threshold. That's fantastic, but it's not enough.
Not enough, yes.
It's fantastic. It's
a stepping stone.
Yes. See, the truth of the matter is that Nigeria, Africa has so much incredible resources that we should be doing several times that amount. We should be talking about trillions of dollars.
Yeah.
That's the truth of the matter. Where they have gotten to is lovely. It's wonderful. It is an achievement. And we should not belittle it. Yes, it's a massive achievement, but we can do better. And I'm saying we can do much better. And that is what the report says. And it's simple. Look, let me give you just a quick insight into some of the things the report looked at. Nigeria has a revenue challenge, a serious revenue challenge. And that's why if you look at the 2026 budget, you're looking at 24 trillion naira deficit. Proposed 24 trillion naira deficit. That's about 4.23% of our GDP. And what do? We resort to debt, which is not bad.
It's not bad.
But we are saying this. There are two approaches to resolving this problem. An income-centric approach, where you tax people who are already burdened and have little capacity to bear the burden of that tax, or which we call the income-centric approach. Or you go to the asset-centric approach, which Proshare has advocated for.
That's one of our advocacy goals for 2026.
Yes, that's one of the advocacy goals for 2026. Just get asset-centric. The income approach is good, but it is not adequate. So let's go to assets. What assets does the federal government have? They don't need to be sold, but they could be leased. They could be concessioned. Right? We could actually, fiber optics can actually be bundled into an asset that becomes tradable on the NASD, OTC market. So there are opportunities for us to realize value from assets that the federal government has now. Nigerian Railway Corporation. Okay? The Petroleum Corporation.
The pipelines.
The pipelines. We can securitize it, generate value from it, and we can take those revenues and plug some of those holes. We can also take those revenues to start up projects that will generate a stream of revenues itself. Okay? So you've got the railways that you can do, the airways, right? The airports we can do. We can concession the airports now. For the report, it is important for us to get to a point where we have a national asset register. Now, we have an asset trade room where national assets are there with details of those assets, right? And then we now say, okay, these assets are available for you to either take as concessions, invest in on a PPP, or generally buy. There's some assets that are just so idle that, for goodness sake, why are we keeping them on our books? Why? You know, the problem has always been that, oh, people are saying that you're selling off our national assets. Oh, no, you guys are just selling off our patrimony. It's not correct. India and Indonesia have shown it to be so, that it's not correct. There is a need for you to be able to identify idle assets, put them together in a manner in which they can be listed on a market and you can extract value. Saudi Arabia did it with Saudi Aramco.
And that's what even made them become a $1 trillion
market. Yeah, exactly. Saudi Arabia has done it with. So what are we doing that is so exceptional? We're not reinventing the wheel. It is just the desire to get our books straightened. Seeing the budget beyond, you see, the budget needs to be a document that meets specific targets and goals in the lives of Nigerians. So it's not about just the size. It's about the application. So I can decide that there are projects I want to fund. And people say, where will you fund it? We don't have the money. You may not have the money. Somebody has the money. Now, the issue is, what are the conditions I'm going to give that person to make it so attractive that he can't refuse from taking over that asset? So if I give a person and said, okay, you know what, you have the concession on this railway line from this point to this point, and I'm giving you 25 years. You do the investments, you recover your money. Don't forget, we have a GSM moment. We just concessioned, right? We just said, okay, you guys can provide these services. We didn't put a dime in infrastructural development. They developed their own infrastructure. They put their masts, did all the things they needed to do. We just gave them the environment where they can do their business. It's the same thing with rail. We can decide that we want to do it on a PPP if we want, or we can decide that, no, we're not going to do it on a PPP. Or we can decide that zero coupon bond, 25 years zero coupon bond could be floated for infrastructural development in the railway system. And railway is important because transportation is at the heart of distribution. And once you can get supply chain. So once your supply chains, you can drag down the cost of those supply chains, you reduce the domestic cost of operations. Therefore, that translates into lower domestic prices, and that improves the outcomes for households. Because that's one of the Proshare's pet issues. How do these issues affect the household?
And
investors. So the household gets better because prices can be brought down. because there are longer term instruments in the market that can be used to develop infrastructure. Because I hear the capital expenditure rolled into the budget now.
2024, 2025.
Yeah, I mean, we're looking at 26 trillion.
Yes.
Hello, where we get that 26 trillion from? If we are talking about tax, you tax people to a point where they will revolt. So, what's the alternative sources? We have assets, and we can use those assets to improve infrastructure, improve the livelihoods of Nigerians, and ensure that we're preparing the groundwork for a more stable, sustainable, and beneficial economy to all Nigerians. I think that should be the heart of the conversation we should be having in 2026 as relates to capital market. We need greater diversity of instruments. We need a deepening of the market. So we need to broaden it, then we need to deepen it. And that's what the report talks about. Yeah. The ways of broadening and deepening the capital market for the benefit of everybody, particularly the man on the street.
I mean, you've taken the bull by the horn, unlock value from our assets. In the next few minutes, how should the regulatory landscape look like? What should be the direction?
Okay. I think the Securities and Exchange Commission has done a brilliant job. I'm impressed with what they've done. For instance, the ISA 2025 has expanded the scope of governance of things like digital assets,
which will bring in a younger
generation of investors and show greater interest. Other things inside the ISA also seem to suggest that the regulators are very concerned about market development. Now, that's the key. The regulator, from our perspective, and as argued in our report, should not be a policeman to the market.
Okay.
Yeah, it's like a policeman with a truncheon. Oh, you commit an offense. Bam, I hit you on the head. Oh, I hit you at the backside. That isn't what our vision for a proactive, pro-developmental, pro-stability market is about. The regulator in that kind of market is developmental. The mindset is developmental. How do I develop the market? What rules and regulations need to be put in place to encourage investors, both domestic and foreign, to put their money in the market and sleep comfortably, knowing that there's an appropriate regulatory framework that protects their money? That is where we need to go to. We haven't gotten there. Yeah. But we need to review all those laws. We also need to get the CMOs, capital market operators, on board to understand that it's a new day on creation. It's a new dawn on creation day. That's the word, A new dawn on creation day. They've got to shift away from the routines they were used to and just thinking about those intraday margins and, some of the more common things they engage in, to look at how do we come together, introduce instruments that enable this country move itself forward through financing large-scale assets. So, for instance, we want to improve the agricultural sector, right? Why must I wait for the Ministry of Finance to do a budget and this? No. Are there projects within that sector that we can identify and structure financing for?
The commodities market can
so that market thrives. The Lagos Commodity and Futures Exchange, we've seen them start some things in the area of gold.
We've seen the rice contracts.
And the rice contracts. So these are the things that we're talking about. Market operators have got to be, you see, you can't lead from the rear. They've got to be in the front, pushing those developments. Yes, push these developments so much so that the regulator is trained. You make them sweat. Make the regulator sweat and say, oh, come. How do we regulate? What is involved in this? Oh, how can we make this better? How can we ease the burden of the market in this area? So they're under sweat to make sure that they are ahead of the market development, not behind it. They're not reactive. They're proactive. So they are saying, oh, this is a development that's likely to happen. Okay, what are the laws that are required? So they're already preparing the laws that will govern those developments, like the derivatives market, for instance. So we have an active derivative market, say, in rice. We have an active derivative market in terms of cotton seed. We have an active derivative market in ginger. That's one aspect of the market. But we could also have derivatives in equities, right? So we can have equity derivatives, fixed income derivatives. We can have there is a colorful variety of assets that can be created and should be created to create that nimbleness, flexibility, and agility of the market that investors will be interested in putting their money there. And our report says that should be done ASAP.
Wow. ASAP, like you said, very important. I mean, this conversation we could continue, but of course we have to leave it at that. But thank you very much, Mr. Teslim Shitta-Bey, Director of Research, Proshare. Very robust insights from the 2026 Nigeria Capital Market Outlook report of Proshare, the capital market and Nigeria's economic recovery plan. Thank you for that. I mean, the need for us to have a integrated, seamless African capital market ecosystem, the need to track the global geopolitical developments as it affects interest rates and even the conditions around the impact of crude oil price and other things. And then most importantly, unlocking value from our assets. It's time from this year, let's go to the market. Let's list some of these major assets and enterprises in the market. And of course, most importantly, the regulator should be pro-development, pro-stability, not just the police, not just policeman rule. Thank you very much.
Thank you.
We hope to have you much later in the year to look around developments. But thank you. And your team doing a great work, publishing very insightful.
Thank you very much.
Thank you very much. To our viewers, thank you for being part of this conversation. You can read the full 2026 Nigeria Capital Market Outlook report by logging onto our website displayed on the screen. If you want to watch this video, you can follow our social media platforms and share your comments and feedbacks with us. We want to hear from you. Till you come your way again, enrich yourself with the knowledge of socioeconomic developments around you, because it's a wise thing to do. Ottoabasi Abasiekong, thank you for watching, and bye for now.